I think a lot of people are worried about the devaluation of the US dollar, all of the runaway debt that we have in this country, $33 trillion in debt, almost $200 trillion of unfunded liabilities, multi-trillion dollar annual deficit. I think it's looking like it's getting worse and worse and worse. Tap that onto inflation going higher or still being uncertain and certainly not under control. The fact that interest rates are going up. There's uncertainty with Jerome Powell and the Federal Reserve. And I think a lot of people are really worried about, like, what are we gonna do? What's happening in this world with the CBDC, a central bank digital currency? What's going on? Are we gonna lose our world's reserve currency status? And ultimately, there's a lot of gold bugs out there and crypto people that are kind of, honestly, just really worried about our position in the world from a monetary perspective, from a currency perspective. And the reality is they have reason to be concerned. And the question there is, like, if you have to keep your money in fiat currency, in US dollars in some way, shape, or form, what's the best way to do it? Now, I've said for a long time that I believe whole life insurance is the best place to keep your fiat liquid currency that you need access to for emergency, for opportunity, that you need to live with to create wealth. And there's a lot of reasons why. I actually heard a video that I did a reaction to from the ITM team talking about how they were worried about whole life. They just don't get it. But in this video, what I am going to talk about is why I think now is the best, and I say best and I mean best, time for you to put money in a whole life insurance contract for your emergency fund, for your opportunity fund, any money that you need to keep in fiat currency. Because I think it's personally kind of a delusional perspective to think that you're gonna get through life right now without having some money in fiat currency. And for the people, listen, I get this isn't for everybody, but for the people that have these really extreme perspectives, that are really worried, I'm always saying you need to align your money with your values and beliefs. And I'm not one to go wildly extreme with these things, but I'm a bit of a nerd about this stuff, and you're about to find out why I believe so much in this. And what I've seen as a big problem, and I gotta say this, what I've seen as a massive challenge is that there are so many crypto people and gold people that are saying, if you're gonna put money in a life insurance contract, put it into an index universal life. And what I'm going to show you in this is how doing so is completely out of alignment with your values and beliefs. If you are a crypto person, if you are a gold bug, whole life insurance is where you need to put your money, because when you put your money into an IUL, you're keeping it in fiat currency and you're keeping it in the markets and in the indexes ultimately that are completely exposed to the US dollar risk, whereas whole life insurance, ironically, you may not realize this, has some insulation against that challenge. And so I'm gonna get into this now. What I'm going to do is I wanna give a little bit of a history, because I think history is important to understand. You need to understand the history of whole life insurance, because here's the deal. When I'm always thinking about this in terms of whole life insurance versus index universal life, because the reality is there's so much more marketing right now online about index universal life. I used to be a huge advocate for index universal life, and honestly have since realized that, like, it's one of the most dangerous and most misrepresented financial products in the world. It's one of the reasons I'm writing my book right now, IUL Exposed. It's going to be coming out very shortly, and I'm really excited about that, because it's the truth about the most misrepresented product in the history of personal finance. And what I think is really important to understand is when we want to put our money into a place, we need to be considering what problems is that money trying to solve for us, right? Our goal with money in a life insurance company is not to, get massive returns, because that's not what life insurance companies do. What life insurance companies do is they preserve the purchasing power of your money. They manage your risk, right? Because that's what they've done. If you go back to this, and I'm going to show this now because this is the history. I want to go through this history a bit because I think it's really important to understand. And the reason I'm so passionate about this is because IUL companies have basically stolen this history and kind of bastardized all the concept to make it look like it's really good for them. So when we look at this, here's the history of whole life insurance. Whole life insurance was created in 1842, early 1840s. A bunch of companies, this is when it kind of became popularized. A bunch of companies in 1842 started getting created. This is when participating whole life insurance companies were created in this window. And now there are a bunch of them in the 1840s, some in the 1850s, but regardless, it was in that era. So one of the reasons when I say to people that we need to align our money with our values and beliefs, and a lot of people are worried about the devaluation of the dollar, loss of world's reserve currency status. They're worried about like basically financial Armageddon with all these new currencies coming in, and what do I do with it? Remember, when I say put your money in a whole life policy, and I'm saying you're letting them manage your risk, this is why I'm saying it, because they've got a history of doing so. We're worried about everything that's going on in the economy right now. Well, look at this. From 1837 to 1862, this was a period called the free banking era. And so what does that mean? And if you notice, 1842 fits right in between these guys, right? If you notice those times, you'll notice that this was a different version of the US dollar, right? This is a different version of the US dollar. It wasn't even the US dollar, it was something completely different. So it wasn't the US dollar, it was a different currency that was used by our government. Now, what I'm gonna show you in this educational video here is I'm gonna show you the process and the fact that whole life insurance companies have been around for 3 different versions of currencies, and they've never missed a dividend. They've never had their clients suffer. They've always managed a transition because their job is to manage risk, and what they do is they manage billions and billions and billions of dollars, and they manage this risk for the most successful people in the world. And you're about to find out why that's the case. And by the time I get done this video, I think if you are somebody who believes in crypto, you believe in gold, I think you're gonna also believe that you need to keep your money not in a bank, but if you're trying to get money out of a bank and you do believe that you need to at least have some fiat currency, having your money in a whole life insurance policy, a properly designed whole life insurance policy, by the way, not just any old run-of-the-mill insurance policy, a properly designed life insurance policy, whole life insurance policy with a participating, mutually held company is the key to your success. Now, 1863, think about this, they paid dividends. Remember, we're talking about life insurance companies that have paid a dividend every single year, okay? So, the free banking era was here. Life insurance companies existed for about 20 years during that period. They paid dividends every year during that. And if you knew anything about the free banking era, it was full of uncertainty, full of all sorts of charlatans, all sorts of scams, all sorts of people taking advantage of other people. So whole life insurance companies came in. They provided a sense of stability, and they became, even though they weren't part of the banking industry, they became kind of a foundational element of the economy and for the wealthy people of the world that were using them. I'm a big believer, this is really important to understand, like you go online and you see a lot of these comments about, ooh, do what the wealthy do. You know, you invest in life insurance because the wealthy people do. Well, don't ever invest in life insurance, but the wealthy people do it. And so my mindset goes, why do they do this? Why are wealthy people, and why have wealthy people for generations utilized life insurance as a tool to build wealth, not just through a death benefit, but through other strategies as well? And when we ask that question why, and we go deep and we really educate ourselves to it, we find out why this is the case, right? So we go back to this period of time and we say, all right, wealthy people were using it here. They started using it here, and they realized that life insurance companies provided stability. In this time of uncertainty, 1837 to 1862, when life insurance companies began to blossom during the free banking era, these wealthy families started utilizing them. Now, in 1863, we created the National Banking Act, and if you know anything about this was the Civil War, guys. Like the Civil War, this is when Lincoln was around and when he got assassinated, when our country was in the most turmoil that we've ever seen since our foundation and that we've seen since. I don't know about you. I cannot imagine a world where the world we're living in right now gets worse than the Civil War. If you believe that we're going to be worse off than the Civil War, well then I think you should probably take a look at my investment fund, and we're building some properties. We have some investments going on in the Dominican Republic. You should probably take a look at those because you're going to want to get out of this country if you think it's going to be worse than the Civil War. And here's what I'll say. you know, if you look back then and you look at the fact that life insurance companies were 20 years old, they were much more immature. They had much smaller reserve accounts. They didn't have all their strategies down the way that they have it down today, right? And so when we look at this, and we look at the way that life insurance companies kind of operate and how they do this, well, they paid a dividend every single year. They even paid a dividend during the Civil War. So if they paid a dividend during the Civil War and they've paid a dividend every year for 180 plus consecutive years, how in the world is anybody concerned about a life insurance company never paying a dividend? Like, they've done it every single year. This is for a participating whole life insurance company, not an IUL. I want to make that abundantly clear, not an IUL. So they created the National Banking Act, which was to create a uniform national currency, because the Civil War, it just messed us all up, right? Like, let's face it, the Civil War was like a total atrocity, right? Like, at this point in time, it messed our country up, messed our culture up. It fixed a lot of things, right? Because it was fought for some good reasons, but it caused a lot of problems, a lot of calamity, a lot of damage, a lot of pain, a lot of hurt, and a lot of uncertainty in the economy, right? And so that hurt productivity, yet we still got a lot of stability that was provided. And not just to mention the stability for the people that got paid their dividends, but let's face it, life insurance during the Civil War was kind of a big deal. And if these guys and the actuaries had everything priced properly, that's pretty awesome. So from 1863, when the National Banking Act was created, this is the second version, second currency that life insurance companies had to deal with. The first currency was the Free Banking Act. The second currency was the National Banking Act, and that lasted all the way through, because there was a lot of uncertainty. This lasted to the third currency, which is the Federal Reserve Act. Now, I'm going to leave it at 3 currencies here, but I think there's more to it, because everybody's freaking out about the CBDC at the moment. Everybody's worried about, you know, losing the world's reserve currency, and they're worried about all these different things. But guess what? This is just history repeating itself. Guess what? We had Bretton Woods in 1944. Well, actually, I'll go back. In the 30s, we had the confiscation of gold, right? We had that happen. And so, you know, then Bretton Woods happened, and then what happened? Fort Knox. We had the largest reserve of gold in the world. So we were given the world's reserve currency. I'll just write WRC there. We were given the world's reserve currency status, which allowed us to become the nation's biggest power. Of course, we abused that. We had World War II, we had Vietnam, we had all these things going on. And in 1971, finally, we either had the choice of default or go off the gold standard. Okay? And so in 1971, Richard Nixon had a famous speech, and we went off the gold standard, and that was what it was. But, you know, and since that time, if you look at inflation and you look at asset rates appreciating, it's been highly driven by inflation. And that's why a lot of people are worried about hyperinflation, like the ITM people that I just did a review on. I get it. I totally understand. The one thing I think people miscalculate is the government's ability to manipulate stuff. But here's the deal. The question is why? Why are people utilizing whole life insurance? And why do I believe right now is the most important time for you to utilize whole life insurance? I want to focus on 1913 for a second, because this is a really pivotal time. We have to think about what is 1913 about, and I want to talk about this for a second. There's this book. Look how thick this book is. This book is called The Creature from Jekyll Island. Okay, The Creature from Jekyll Island. This book is almost over 600 pages long. Okay, G. Edward Griffin wrote this book, and it's all about how the creation of the Federal Reserve came to be, and lots of history in it. But really, what you're going to notice in here is in 1913, actually began in the late, like right before 1910, began the conversations around the creation of a Federal Reserve Bank, which is not federal and there's not designed to be a reserved. You know, it's really designed. It was a J.P. Morgan and his banking cronies, you know, and the banking cartel. Basically, they designed to try to take and privatize the federal monetary system. Is really what it comes down to, right? So what happens is they created the banking system as we know it today, what we would call a fiat currency system with an elastic currency, right? Where we had the ability to manipulate interest rates and print money, put it into circulation, raise interest rates, take money out of circulation. That was all, it was a good pitch, and it was designed and pitched at least as a way to kind of curve, to flatten the curve, right? To make the highs not so high, curb the boom bust cycles that we were having and seeing over and over again. They were saying that they could create more stability in our economy. But here's what I want to say want everybody to realize is that before 1913, did you know all the wealthiest people in this time frame were keeping their money pre-1913 in whole life policies? That was the number one place to store capital, was in a whole life insurance company, because they proved to have the most stability because they paid a dividend every single year, and not one company during that time had failed. Not one participating mutually held whole life company had failed. So all the most successful people in the world were storing their money in whole life insurance policies. So when 1913 created, the banks were created, and what happened is they said, give us your money, and you should keep your money in our banks, but we're going to keep our money in whole life policies. So even though they created the Banking Act, they created rules that allowed the tax benefits and all the benefits, because the wealthiest people in the world had their money here already. The politicians, the bankers, the corporations, they all had their money there. So when they created the Federal Reserve Act in 1913, they had to create laws and regulations that allowed them to keep benefiting from the policies that they had going on the whole time. And so it remained a best kept kind of secret of the most successful people in the world to keep money in whole life insurance contracts, because of the fact that that's what they had always done. But over a period of time from 1913 and beyond, and the longer it's gone, the worse it's got, because the further we get separated from the origin story, the more the story gets muddled, right? And what happens is, like, now they've gotten everybody to believe that we just put our money in a bank, and that we should, and they're putting their money elsewhere. They don't keep their money in their banks. In fact, if you look around, the largest holders of whole life are banks, corporations, and politicians. So Barry Dyke, Pirates of Manhattan. I want everybody to read that book. It's a long one. Go to barryjamesdyke.com. Amazing book. It's not cheap, but it's worth it, right? Like, I want everybody to realize that. I saw a stat, I can't remember where it was, but it was something like 80% of all policies held in a whole life, all cash value held in whole life insurance policies are owned by banks and corporations, right? The fact is, out of the politicians, Barry Dyke in his research found 54 politicians and people that work at the Federal Reserve that have their money with participating mutually held whole life insurance companies. So when you look at that, because remember, all the audits of every public politician is public, right? They have to do an income disclosure anytime they run for office. And so that's it's all public information. He just found it. And so the most successful people in the world are utilizing these strategies. And I will say Ben Bernanke, the chairman of the Fed during the Great Recession, he had all his money in whole life insurance companies. The Federal Reserve, think about this, the Federal Reserve's 401k plan, they took it out of the markets pre-recession, pre-bust in the Great Recession, and they put it with life insurance companies. Do you think that is an accident? Like, you know, I'm not like a conspiracy theorist, but when there's enough evidence that lines up to this stuff, you gotta take it seriously, right? So finally, you know, you look at this and you're like, okay, this is why they do it. Well, in 1971, we go off the gold standard, it adds to all this inflation. 2023, all these people are worried about the CBDC, okay? And so here's the deal. Like, when we really break this down, when we really look at this, if you are somebody who is worried about this, you love gold, you love cryptocurrency, you want to put yourself in a position where you can thrive and take advantage of whatever opportunity is created in this madness, because make no mistake about it, there is going to be an abundance of opportunity created through the uncertainty that's about to come. You're either going to become wildly wealthy through the opportunities that are created in your preparation for said timing, or you're going to get massacred financially in the process. And so my challenge is, I'm going to come down here. My challenge is there's a lot of people that align with this, that align with all the worries and concerns and the facts that I've been bringing up. And I've seen influencers with a lot of followers on TikTok, on Instagram, on YouTube. And those people are out there and they're representing IUL as an alternative to a 401k because you want to get the money out of the government's hands, because 401ks, remember, when you put your money in a 401k, you are giving that money to the government because you're deferring taxes. You are deferring taxes to pay at a later date. Well, right now our debt is 32 trillion. Our unfunded liabilities are near 200 trillion, right? Taxes are near the lowest they've been at, like I think 35%-ish, maybe 37%, or maybe it's 39% top marginal rate, but 35 all the way down to like 10%, right? For a rate that's the lowest that they've ever been on a long-term scale, and we have the highest debt and the most uncertainty, so taxes have to go up. So why would you defer taxes right now, putting in a 401k, giving it to the government, allowing them to raise your taxes, basically reducing your money? It made sense to put money in a 401k in 1980 when tax rates were, say, 70% at the top rate, and you could defer taxes at a high rate and now take a distribution at a lower rate. That makes all the sense in the world, but that's not the environment we live in. We have to think about why we're doing what we're doing. So the idea about the IUL is it's a rich man's Roth, right? Because it's got all these things, and there's a lot more going into the IUL, and I've got a lot of videos on how IULs actually work. I've got a book, IUL Exposed, coming out that I'm gonna break it all down. I've got a new masterclass that I have coming out. I've got a lot of different things on IUL, so make sure you subscribe and hit the bell, that way you're notified, because I've got a lot of videos coming out that are gonna educate you about this. But it's really frustrating for me to see influencers and other people that are out there with these mindsets and with these beliefs pitching this, because all you're doing is you're shifting from the government to the insurance company. The IUL company has control. With a whole life insurance policy, you are a partner with the insurance company and you benefit from the success of the insurance company. With an IUL, you are a profit center of the insurance company. Make no mistake about it. Remember, IUL is just a new iteration of the traditional universal life. Traditional UL was created in 1980. It was a colossal failure. Lots of people had lapsed policies, lost tons of money. All IUL was is said, oh, instead of giving you a fixed credit rating, we're gonna take that fixed credit rating, we're gonna go buy an options with it, which is not designed to get you mass returns. They're not doing anything creative or sexy with it. It's a basic call option, which is used as a hedge strategy. It's not gonna get you a big return. It's not designed to do the way it's been sold, and it's the most misrepresented product that we've ever seen. And on top of that, it doesn't give you all the benefits that I'm talking about up here. It doesn't give you the control. It doesn't give you the liquidity. It doesn't give you the guarantees. You know, the only thing it does is it benefits off the back of the success that whole life insurance companies have used. And what ticks me off a lot is when agents are out there saying, oh, you know what, do IUL, because that's what the Rockefellers did. It's what, you know, the Rothschilds did. IUL didn't even exist until 1997. It's a failing financial experiment. And so when you do this, all you're doing is you're putting your money back in the fiat system, because you're taking the crediting that you would be getting on a guaranteed basis and you're buying options with it. You're putting it in the market into something that you don't understand, into something that you can't control. Remember, I believe the best value you can make is in yourself. I believe that we need to be buying hard assets. I believe that we don't want to take risk inside of an insurance company. We want to use the insurance company for what insurance companies do best, which is preserve the purchasing power of our capital and manage our risk. Now, when I look at this, I go, okay, that's what they've done for 180 years successfully. Why am I going to mess with that and start messing with the system that works? Because here's the deal. A lot of people don't understand this. When I do IUL, I'm just taking the money and I'm putting it in the market. Most people don't understand with a whole life insurance policy, you have like 25% of the policy or of the general fund, and then 75% 75% of the general fund goes into things like treasury bonds, treasuries, mortgage-backed securities. It goes into corporate bonds, like like AAA rated corporate bonds. Okay, it goes into things like this that are like AAA rated. Really good returns, not sexy, but this is how they do it. And so the people that are worried about insurance companies getting wiped away with hyperinflation are people that are worried about the fact that treasuries, like that's where they are. Well, guess what? Yeah, they have a lot there because, what I want to do is I want to set myself up in a situation where I can win no matter what happens because, I'm worried about the devaluation of the dollar. I'm worried about losing the world's reserve currency status. I'm worried about all that as well. But I also realize that, we could be worrying about nothing and that, there is a chance, nobody knows for certain what's going to happen. There's a chance that, they're able to manipulate this for another couple decades. And if you act extremely and you don't take advantage of this, there's an environment right now that the US dollar gets stronger and that our bonds get stronger and stronger and stronger, and that insurance companies with this portion of the portfolio do extremely well. Right? So if you just negate that and you're like all in on these other assets without considering what you're doing with your fiat portfolio to take advantage of it, to go out and then leverage this, because now when I put my money into a life insurance company, they're going to manage all this. So I get bond like returns with savings account, savings type liquidity. Okay, that's really important to understand because now we want to leverage this money that we have in our whole life policy to go out and buy hard assets like real estate, invest in things that you understand that are your unique ability. I like real estate. I like businesses. Maybe for you it's crypto. Maybe for you it's something else, but you should only invest in something where you have a unique skill and ability to be able to get a positive return in that. Now, I'm going to also focus on this because this is where a lot of people miss the ball with whole life insurance, and this is where IUL is totally out of alignment because IUL does not do this. When you put your money in a whole life contract, what you're doing is you're saying, hey, I want you to take this 25% and you're going to go out and you're going to do things. Every company does a little different, but they have the ability to buy some crypto. They have the ability to buy gold. They have the ability to buy alternative assets. This is where they can create returns. This is where, when I talk about the life insurance company managing risk, this is what I'm talking about. They're doing this. You can go manage it on your own, or you can give it to somebody that's managing billions and billions and billions and billions and billions of dollars, and you could say, hey, I'm gonna let you manage that risk for me. And by the way, hey, you've been doing this for 180 years. By the way, every time there's been a transition of power, a transition of currency, a transition of anything, you've managed that risk. You've paid a dividend every single year. And so I'm just gonna trust, let's just have a little faith. I'm gonna trust that if that happens, if we hit that scenario, you're going to have it, life insurance company. You're going to manage this risk with this 25% to get me what we would call an asymmetric return. Meaning, if they have 1%, let's say they have 1% of crypto in the portfolio, and the US dollar loses 99% of the value, but crypto goes up 200% or 200x in value, which is probably what would happen, that means you still remain whole in here. Well, guess what? They're able to manage that risk inside of a whole life policy. And as they see these transitions coming from currency to currency, they're going to manage that risk when they see fit because that is their job. And we know, this is becoming a little bit messy, that's what we know, but as we know and see through history, banks, corporations, and politicians have more money in these policies than anything else. So if there's anything I know, I want to have my money where these guys have their money when STFU, you know what hits the fan, right? Like that's what I'm talking about. That's what, when I talk about wanting to have my money in a whole life policy, that is my why. And you need to really understand why, not just what you're doing. And you need to be able to articulate it for yourself. And I would say you need to understand how this, I'm going to do red or I'll do gold. You need to understand this. You need to understand how this strategy and having your money in this policy is going to help you become who you need to be to live the life that you want to live, to get to where you want to get. And if it's not doing that, whatever you're doing with your money as a whole, I don't care if it's crypto, I don't care if it's gold, I don't care if it's investing in the stock market, I don't care if it's putting money in a whole life policy or an IUL, if it's not putting you in a position where your money is helping you become who you need to be to get to where you want to go, then it is not a strategy that is in alignment with your values and beliefs, and you need to be doing something else. And so, anyway, that is my problem. I don't know what else I want to say about it. I guess I'm done. So anyway, hopefully you found value in that video. It's a little bit of a rant for me. A little bit frustrating, but it's just because I had a couple conversations today that were pretty big conversations where I'm seeing a lot of people that are getting exposure to IUL and that are being sold IUL that are not completely understood. And I really want to do something about this, and I really have a passion to be able to expose the truth about this stuff and get people saved, because I really believe in the power that life insurance can play in people's lives right now. But I also see the calamity that it can cause if it's done through an IUL without understanding of how it works, right? Because I truly believe that if you understand how IUL works, you would just not do it. You would go with a whole life policy every single time. I sold IUL for 4.5 years. I was a director of business development for one of the top IUL companies in the country. I bought the bait, right? I hook, line, sinker all the way, and I believed it, and I had to walk away from it because I learned what I learned. So, I'm just trying to save people, and, I see this stuff, and sometimes it gets frustrating. I spend a lot of my life doing this. I spend a lot of my energy, trying to connect with people and trying to serve people and help people and really help this industry. And so today was, honestly, this is a little bit of a public vent of my frustrating day. So hopefully you found value in it. You got some education. And if not, hopefully maybe you were entertained a little bit. But anyway, that's it. Have a blessed, inspirational day. Any comments, leave them in the comment section below. If you haven't and you did enjoy this and you think you want to hear more, and if you haven't subscribed, make sure you subscribe and hit the bell. That way you are notified every time I launch my rants. All right, take care.